So let's do some reaction videos and find out what other traders is doing on the internet. Let's see if we can I could learn a thing or two, etc. In terms of trading, stuff that I have never looked at before. And yeah, right, let's hit start recording. It's start recording. Should be recording my screen. Right, cool. So this guy here is saying that scalping was hard until I found the 15 minutes, well, the secret, right? So let's see what he has in store for us. Right, so I'm now watching this video. I'll give you my thoughts and opinion. Let's see what's going on.
Until I grew that particular account. However, the biggest question is, how do you grow a small trading account? It comes down to several.
Right, so let's start it over.
I understand that
and pick up the screen. So we should be doing our first reaction.
not everyone has enough money to deposit in their broker. We always start with small accounts. I've been there. I've been trading small accounts up until I grew that particular account. However, the biggest question is, how do you grow a small trading account? It comes down to several things. The first one is a trading strategy that gives you enough frequency, and by frequency it's basically the number of trades that you can get, so that you can get into the market and close, so that the balance will be actually rising. In this particular video, I'm going to teach you a particular trading strategy which falls under the scalping category.
Okay.
And if you take it seriously from the start up to the end, I guarantee you to see results. Of course, there are some parameters that I cannot change on your side, which includes patience, discipline to follow the rules that I'll give you, as well as your general trading psychology. Without further ado, let's jump right into the video. Alright, so the strategy that I'm going to show you is basically under the scalp.
So what he was saying, it sounds like to me he have some experience, right? I haven't clicked his channel as yet. I don't know who he is. I just saw his video suggestion pop up, and let's see what's going on. People nowadays just do things to just get some views, Alright, so
Scalping strategies. If you are serious about changing your life, or if I can say growing a small account, then watch this particular video maybe twice so that you really comprehend what I want to put forward. All right, so basically we are going to be utilizing the M15 time frame. That's the first thing that we need to write down, is on the M15 time frame, and we can apply this particular strategy on any tradable asset that we can get. All right, so basically if we look at this particular tradable asset, which is Australian dollar against NZD, we are to find entries in points such as these, right? So this is where we want to make our entries to the upside after such a flow. Another point we can see, after such a flow, we want to make our entry somewhere at this particular point to the upside. So the scalping is basically whereby we enter the market and then exit. All that we want to get is this particular move to the upside. However, if we look at this particular illustration, we can see that it's actually subjective. How do we determine entries at these choppy phases, right? So to remove that subjectivity, I'm going to incorporate indicators that are going to give us rules of market entry, what we need to see first before we react, right? So the indicators that we are going to require are basically the 5 EMA, the 13, the 50, and the 200, right? We're not going to require this one. It's basically a saved template, so we're not going to require the TDI as well as this one. We are going to require only,
right? So remember in my previous video we talked about moving averages. So he has some moving averages here, but I didn't hear properly which one he said he has. So let's just go back that, because I end up getting a text message and it distracted me for a sec.
the 5 EMA,
5,
the 13, the 50, and the 200, right? We're not going to require this one. It's basically
5,
a saved
13.
template.
Right, so he has the 5, the 1 3, which is the 13, the 50, and the 200.
So we're not going to require the TDI as well as this one. We are going to require only these EMAs, right? So within these,
Right, so he actually had a 800. I used to have a 800 on my chart as well too. So he's using the 5. The 5 would be the yellow, the red would be the 13, the 15 would be the light blue, and the 200 would be the white. You know, I could sort that out from experience.
EMAs, what do we need to see, right? So the M15 time frame creates what we call cycles. So these cycles basically gives an ending of low and then a restart of another cycle. That is now something that I discuss, or I go deeper in my in my mentorship. All right, so in this case we can see that we had this 1350 EMA cross on this M15 time frame. The 1350 EMA cross, the 50 in blue and the 13 in red, are basically EMAs that are giving us trend direction. So this crossover to the downside is telling us that the trend is in a downward move. And what we want to do is to oppose that particular trend. If the 1350 are going to the downside, we expect to get a buy when the trend has given us the opportunity. How does that come up? So in this case, we have the 1350, the trend is downward. After that, we can see there was a 513 EMA cross, right? After the trend, you can see 1350, then 5 in yellow and 13 in red being issued like that, and then a drop, right? Then we can see another 5 EMA crossing the 13 EMA at this particular point, then a drop. So if we look at these things, we can see that there was a 1350, 513, 513, and giving us 3 flows like 1, 2, and then 3, basically like this. And then at the end of the third flow, that is where we want to make an entry by finding a candle that closes above the 13 EMA. So the candle in this case that closed above is this one. It was a bullish candle actually closing above this red EMA, and this is where we were going to make our entry like that, and our stop loss right below the structure. Our target is on the 200 EMA. That is the use of the 200 EMA. So we've said it's 1 1350 EMA cross, 2 513 EMA cross, 513 EMA cross, candle closure above the 13 EMA, and we get into the market. Stop loss below structure, target is the 200 EMA, basically like that. So let's have more examples so that we fully understand how this comes into play, right? So here we can see as well the perfect thing that we want to see. We can see there was this 1850 EMA cross. Then after that we had a 513 here, and after that we had another 513 here, and next we want a candle closure above the 13, which occurred at this particular point, which is this one. So candle closure above the 13 gave us an entry and our exit at the 200. When the price touches the 200, we know that it's time to exit the markets, basically like that. So that is how we will be trading with this particular scalping strategy. It's simple. As I always love, simplicity is the ultimate sophistication. That is what I do in my trading. I don't like complicated stuff. I love these simple stuff. It's the 1850 EMA cross of the 513, cross of the 513, candle closure above the 13 EMA. We enter the market and we exit at the 200 EMA, basically like that. On that note, we've come to the end of our today's video. Thank you for watching, like and subscribe, and I'll see you in the next one.
Interesting. So my thoughts on that, well, that's the first time I saw a strategy you actually break it down really simple. So it has potential. So it has potential. I could probably add in something there. This could work with market cycles, as I see. But what here is, I'll be honest with you, most of us would go back to our chart and we would see some, like, he probably saw somebody doing this, right? And he looked at it, he went on his chart and he went back and he found the indicators to align properly like this. But from my experience, most of the time when you go back to do this strategy, does not always work. But yes, it could work because price has to be beneath the 200, and you are looking probably, well, I did hear him said the market move in cycles. I did hear him say it once, which he's correct. So if the 50-13 cross coming down, it's beneath the 200, and you are currently looking for a pullback to go back to the 200 at the first, this is my experience, at the first, okay, the screen is recording still, so if you can see the mouse, right, let's hope you could see the mouse. So let's cross at the first time, you would see market come down and it does not go back up to the 200, which the 200 is here. So this strategy, it would work, but I did hear him say market moving cycle, so probably at the end of the market cycle it would definitely work like here. So let's say this from up here to all the way here was a daily market maker cycle, and that cycles up, and now it's time to do the retracement, and it would go all the way to 200. Just saying, right? But many times I did strategies like that in the past, and MA cross, and it never come back up to 200 or etc. It will bounce right there. But it's same concept as how I trade, but I start to look at it really different. But great strategy. You just have to know basically what to look for.